Hey, wanted to make sure I get everything lined up here. Hey, I just wanted to welcome you guys to the live event here today. We're going to be breaking down three different ways to invest in mortgage notes and why smart investors use all three. Oh, sorry, I just dropped my wallet here. And whether you're new to the note investing game or already in the game, this will definitely help you build a smarter cash flow. I've been investing in mortgage notes since about 2008, 2009. Came from rehabbing houses. I owned a lot of rentals. I got tired of the tenants, the toilets, and the trash out. So just wanted to talk a little bit about this. So I'll go ahead and share the screen. So hopefully I'm looking to make sure it's coming up. So yep, looks like everything's coming up here. So what I did was I broke it up into three steps. Actually got the had to give credit to another note investor, Jamie Bateman. He did a really good job on the way that he explained the three different steps. I'm a real big graphics guy, and I love what he did. And I just kind of I took what he did and I just modified it a bit. But shout out to Jamie, really good, smart note investor. Um, so if we look at the first tier, performing notes. So let's go ahead and just talk about that. These are loans where the borrower is current on payments. You basically step in as the bank. You get monthly payments. It's low risk, steady income. And it's perfect if you want predictable returns, great for beginning investors or people using their self-directed IRAs. And what I'll do is, I know that there's three different things that I'm covering here. And what I'll do is, within the next coming sessions, I'll go ahead and I'll break out more of the benefits of the performing notes, reperforming, and non-performing notes as we upcoming sessions. So the next one is reperforming notes. These are just basically loans where they were behind at some point in the course of their life, um, and then they ultimately became back on track. And so when they become back on track, that's the note buyer that actually purchased that note. They had the intentions of buying a non-performing note. They don't, and this is me. I don't want to foreclose on anybody. I would much prefer to do a loan modification or some type of reinstatement to try to get them back on track. So typically, a reperforming note is consecutive payments of 6 to 12 months, and then really for me, after 12 months. I really view that as a performing note. Anything less than 12 months, I view it as a reperforming note. And then you can get it for, in my opinion, you can buy it at a lower percentage of the UPB. And like it's one of the things like I was just talking about, you can just get you can get a discount in buying them, but they are a little more risky. The upside though is you earn a higher return, and these are great if you're okay with some kind of mild bumps in exchange for better yields. And that's what I was talking about before. Is somehow they got behind on their payments, for a year or two, and then the note investor, me, I bought that non-performing note, reached out to them via the servicer, and got them back on track. And I do this a lot. I absolutely love buying non-performing notes, reperforming notes. And lastly is the non-performing notes. These are the riskiest but offer the biggest discount. The borrower isn't paying, but you can either modify the loan, get the property, or resell it. It takes more skill, but the payoffs can be big if you know what you're doing. And as a little side note, if you are new to the note investing game, I would not start out with a non-performing note. There are a lot of performing notes out there that you can get your feet wet with, get everything set up, understand it, and then you can eventually work your way into a non-performing note. I personally like to do like a 60, 70% performing, 30, 40% non-performing. I know within my portfolio, I know other investors that just strictly buy performing notes. I know other investors that just strictly buy non-performing notes. I know other investors that buy, their portfolio is 50-50. I like a blend, so that way, of all three actually. So that way I can just make sure my portfolio is consistently growing and churning that money around. So really, I guess that's pretty much all I wanted to cover with this. So, like I was saying before, most people only invest in one type. I really think that that's a big mistake. Each of these play a role within your investment goals. And smart investors build a mix, some stability, some upside, and some strategic planning. And so, if you found this helpful, tap follow. I'll post some tips on passive income and notes weekly. My goal is to do a live stream every Friday at noon. I got a little late start on this, just due to lunch, so I apologize. So, I would like to do this noon Eastern time every Friday, and then also drop notes in the chat if you think if you would like a free cheat sheet on how to actually get started, or if you have any questions. I'll hang around for a few minutes to answer them. So please feel free to ask them. And let me see. I will. Hang on a second. I'll turn my camera back on. Let me go back over here. All right. I'm not seeing any questions. I'll just hang out for a few more minutes if you had any questions. And then if you also wanted that free cheat sheet, let me know. I can send that over to you. Let's see. All right, guys. I don't see any questions. Once again, every Friday at noon, my goal is to go live with little tidbits on note investing and also real estate investing as well. And like I was saying, if you have any questions at all, please feel free to drop them. Reach out to me. You can schedule a time with me, talkwithlarryhoffman.com, or drop them in the chats. I'm streaming this on YouTube, LinkedIn, TikTok. So please feel free to to post those your questions and or book a time with me. All right, guys. I will.